This is Benzinga Live with Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have
breaking news. What is up, everybody? Happy Tuesday. Welcome back to another episode of Benzinga Live. And it's a Jerome Powell day. We've got the stream going on a separate stream on this channel, but I'm going to pop it up on here in a little bit, and we're going to be able to watch live and do some live commentary. We also have some exciting guests coming up. We have Warwick Smith, the CEO of American Pacific Mining Company, going to join us, and we're going to talk about the outlook for copper, gold, and some other precious metals. I know commodities has been something we've been getting a lot more questions and people talking about in the comments recently. We also will have Options Mike hopping on. We're going to be talking some options. Speaking of options, I've been throwing out some live trades the past, or some options trades the past few days, and I'm going to make some live on the show today. Let me go ahead and pull up actually my Robinhood account here. And again, real quick, if you guys are new to this show, new here, first time watching, my Robinhood account, I said this last week on last Thursday's show, I basically treat my Robinhood account as if it were, my DraftKings account or something like that. Like, if I'm throwing out some of these options bets, I know there's a good chance, right? A lot of them are going to expire worthless or whatever, but it can be fun to do sometimes. I got stopped out. I had some SPY puts that I bought before Powell started talking that I got stopped out of I made money on them. I put my stop limit up. Let's see. Oh, wait, you guys can't see my screen yet. One second, y'all. All right, let's pull up my Robinhood account. So we're looking at SPY right here. You can see now we're trading down more than 1% today, getting down to that 400 level. Well, I'll pull up my Benzinga Pro where the charts are a lot more comprehensive than what we see here on Robinhood. But I'm just here for my trades. So let's see, show more. I bought the contracts actually yesterday, 3 contracts at 57 cents, sold one at 130, sold the other 2 at 111. So this one was for more than 100% gain, not bad. So I made some decent money on that, but I'm curious what these options would be worth right now had I not sold them. I mean, the SPY 400 put 370. It won't even let me look at them on Robinhood because I can't buy the ones that expire today because I've got a day trading restriction. But I also had some Tesla puts. So you can see here on my portfolio, up a little bit more than $400 today. Not bad. I took some of those win-ins and threw some into a stock I like right now that I'll be able to get into in a little bit. But I opened up some new contracts on Tesla right here. And basically my thesis is just that I think Tesla, it went down too far too fast. That's why we had this big bounce back to the upside. Tesla went from about 100 back up to 200, basically up 100% in a couple months. And anytime I see a stock move that high, that much that quickly, I think there's going to be a little bit of a pullback, and you're starting to see that in the chart right here. And again, we're just looking at these Robinhood line charts. They're not the best charts ever, so we can look at it in Benzinga Pro in a little bit. But you can see how this started to top out right here at a little bit above 200, like 215 or so, and it's starting to come down. And with Powell, the way Powell was talking today, he's saying we're going to have to raise interest rates higher. This is not great news for a growth stock like Tesla. And if you think about the implications that the interest rates have on people just buying cars, it gets more expensive to buy a car, to finance a car, especially if you're looking at an expensive car like a new Tesla. I mean, when you're talking about the interest rates rising and the impacts it has on a monthly car payment, yeah, that can be pretty marginal. But when you're talking about a more expensive car, like an $80,000 Tesla, and interest rates are now getting to the highest point they've been at any point since, since we cut rates in like 08, 09, then that starts getting to be becoming a problem for a lot of consumers. And so I would not be surprised to see Tesla pull back here the next couple weeks from about where we're at now, 190 to about 150 or so. And then at that point, we can kind of reassess and say, okay, do we think this is going to keep going down to those lows? Do we think it could bounce from here? And I don't really know. I'll cross that bridge when it comes, or however the saying goes. Hold on. Let me looking at comments. We'll watch Bella Foreign. Oh, BLPH. All right, let's check out some of the high runners today. Haven't looked at any of those. Tesla Q, good play if you want to play options. Yeah, exactly. I mean, that's the thing with buying puts. I got lucky because I bought some of these Tesla puts yesterday, and Tesla happened to go down pretty severely right here not off the open, but at 10 a.m. when Powell started talking. You can see right here, 10 a.m. Tesla was trading at 190, down about 2%. 5 minutes later, it was down 3%. So I got out of some of those contracts then, and because I had those puts, I got paid well because of that huge move downward. What Marky's saying here basically is if you're just short Tesla, you just think it's going to go down, but you don't necessarily think, okay, it's going to go down a lot today or a lot tomorrow or a lot sometime this week. You're just pretty confident that it's going to end up going down. Then you can play Tesla Q and then not have as much, worry about the time. You can just say, okay, and let's take a look at the Tesla Q chart because yeah, I mean, it pretty much is inverse exactly what Tesla's doing. So you can see here over the last, it had this big spike up. And these inverse bear ETFs, I'm not the biggest fan of just buying and holding them, but as a trading vehicle, right? Like if you want to be short Tesla for the next 2 weeks, but you don't want to be tied to that time decay that comes with, options, then you can certainly trade Tesla Q. Speaking of Tesla, and this to me is a bigger problem that I think, I think it's less reflected in the day-to-day stock price and probably will be more something that we're looking at in hindsight, like over time, like a few years down the road, looking back on it and being like, oh yeah, that should have been a sign or what, whatever. But I do think there's something to be said about just the overall sentiment of Tesla. And when you're talking about Tesla, you got to talk about the man, Elon Musk. And last night, I mean, I'm sure most of you guys have seen this by now, but this was making rounds on Twitter. I'm going to go ahead and pull up because I actually just wrote an article about this. But basically, let's see, my buddy Matt Binder over at Mashable tweeted some screenshots of it. So basically, you had this guy, Hallie. He said, 9 days ago, access to my work computer was cut along with about 200 other Twitter employees. However, your head of HR is not able to confirm if I am an employee or not. You've not answered my emails. Maybe if enough people retweet, you'll answer me here. I mean, honestly, this is pretty resourceful. Like, if I was the guy's boss, I'd say you're showing you're pretty resourceful here because you didn't get an email back from me. You didn't get an email back from HR. And you went through other measures. You took matters into your own hands. You went to Twitter. You said, if I get enough retweets here, maybe you'll answer me here. And guess what? He was right. He did. Elon Musk did answer him here because Elon probably wouldn't have answered him in private. Didn't care to, wasn't important enough. But then once it's out there in public, he wanted to. Hold on. I got to message options Mike real quick. And so, and here's also here's my big problem with this, and I'll go through the story first, so the facts of what we have so far. So Elon says, what work have you been doing? He says, I would need to break confidentiality to answer the question here. Elon Musk says, you're approved. Go ahead. Among others, led the effort to save about $500,000 on one SaaS contract, that's software as a service, supported closing down many others, led prioritization of design projects across the company to make sure we were able to deliver with a small team, led design crits to help level up design across company, was hiring manager for all design roles, worked on efforts to steer company away from focusing on power users and to younger users because our user base is aging. Which SaaS contract exactly? Prioritization of what design projects? Figma, all active design projects. And then Elon just did 2 laughing faces. And then he posts this meme from Office Space, which is a kind of ironic in a way because I think this whole scene in Office Space, which if you guys haven't seen that movie, it's a great movie. I mean, it's funny. and kind of a good critique just on overall like office culture in the United States. I mean, it's kind of old now. It came out in 1999, so it's 2022 now, so it's 23 years old. It's kind of old, but I think a lot of it still stands up. I think it was one of Jennifer Aniston's first like big movies too. I think she was in Friends leading up into that, but at that time, even more so than now, like, you know, movies and TV shows were seen as like two different things, right? You could be big in TV, but you weren't really big until you were in the movies. And again, I think that was one of Jennifer Aniston's like first really big movies. But what's funny about Elon Musk sharing this meme is that like, and I haven't seen the movie in a while, but from what I remember, like the whole scene is like making fun of these managers. And in this sense, Elon is these managers. He's the one saying, so what exactly do you do here? You know, and all this stuff. And it's like, what like, I don't know. So it's basically, you know, Matt Binder. It wasn't just Matt Binder. A lot of people were on Twitter criticizing Elon Musk for this, right? And I don't know if every single person that criticized Elon Musk for this move last night already didn't like him before. You know, because I've talked about a lot before how Elon just happens to be this like very polarizing guy. People are either usually pretty big Elon fanboys or they don't like him a lot. Or they dislike him a lot. And so I don't know, but I think the more stuff like that, and I mean, this guy, he like, let's go to his Twitter account. Like he is, and Elon Musk says, you know, put something in quotation saying like, oh, here we go. The reality is this guy who's independently wealthy, did no actual work, claimed as his excuse that he had a disability that prevented him from typing, yet was simultaneously tweeting up a storm. Can't say I have a lot of respect for that. And I mean, look at this. This has 60,000 likes. So it's not like, you know, everyone disagrees with Elon on this. There are a lot of people on Elon's side saying, okay, yeah, this guy said he was disabled and now he's tweeting. How is that possible? Well, you know, as Hallie explains in his thread, hope you are well. I'm fine too. Thank you for the interest in my health. But since you mentioned it, I wanted to give you more info. I have muscular dystrophy. It has many effects on my body. Let me tell you what they are. My legs were the first to go. When I was 25 years old, I started using a wheelchair. Look, I'm 25 right now. If I had to start using a wheelchair right now, like for the rest of my life, I really don't know what I would do. It would absolutely, like, I don't know, be terrible. But anyway, it looks like he's 45 now, 20 years later. Either way, it just seems, you know, weird, I guess, to so publicly, if you're Elon Musk, be like, show. And again, so this is all what we all know what has happened. Basically, like, quick timeline. This dude, Hallie, had his company, Uneo, or Uno, acquired by Twitter a couple years ago, back when Jack Dorsey was still in charge. You know, as part of the acquisition, Hallie came on the Twitter team to help with design stuff. And then, you know, 9 days ago, as Hallie said, he got shut out of all his stuff, but never got a formal letter saying you're let go, you're fired, whatever. Just got completely shut out. Couldn't even get an answer. Couldn't even get a simple, like, yes, no, you're fired, whatever. So this is why he started the thread on Twitter asking Elon Musk. And so, you know, then Elon confirmed, or someone from Twitter confirmed that, yes, he has been let go. But here's my big issue with it, is it just shows like a huge lack of lack of organization at Twitter, that you have someone who legitimately did not know, were they employed by this company or not? And okay, I get it that Elon's saying this guy's independently wealthy, right? He sold his company to Twitter to Jack Dorsey. He'll probably be fine for the rest of life. Probably didn't even need to work. Maybe he wasn't working that hard. I have no clue. But that shouldn't matter, right? How much money you have, because even if you have money, even if you're independently wealthy, people, you know, want to feel fulfilled. They want to like their job. They want to go to work. You know, some people want to work. Some people have the option to essentially not work for the rest of their life and still choose to do productive things, to work at a company, whatever. So just to say, okay, this guy's wealthy, so he does not deserve like the basic empathy that it would take to let someone know if they have a job, or like, I just don't understand that part of it. And I guess I think that's some way of Elon trying to say, hey, don't feel sorry for this guy. He's trying to make you feel sorry for him because he's in a wheelchair, all this stuff. Don't feel sorry for him. He has money. Like, think about it if roles were reversed and Elon was like on the board, somewhere and didn't know if he had been fired from the board or not. You don't think that would perturb Elon Musk? You don't think he would be upset by that, by just the fact of not knowing that, by not knowing if you're employed by the company or not? And here's the other thing that really, really bugs me about this whole thing, and we'll go back to Matt Binder's screenshot just because he has it all compiled in like one place. So I don't have to flip through all the threads and stuff. It seems pretty cut and dry. 9 days ago, the access to my work computer was cut along with 200 other Twitter employees. That seems pretty obvious to me, right? Like, all right, dude's been fired. At the very least, locked out, and along with 200 other Twitter employees. So it sounded like the decision had already been made. In fact, I would bet that Howley even knew, that's the end, but he wanted that final confirmation, or maybe he just wanted to go public with this to show what a shit show what a shit show it's been at Twitter. But here's the thing that I think really gets me is that if the decision's already been made, Elon Musk is basically dragging him through this public exit interview for no other reason, I don't think, than just to try to humiliate him, right? Elon Musk is saying, what work have you been, like in this exchange, I'm sure Elon felt like, the big bad, the big guy, like kind of beating up on the little guy saying like, look, I'm in charge. What have you been doing? All this stuff where Elon could have just said, yeah, you weren't doing enough work, you're fired. And it probably would have been the end of that. But going through this whole charade of saying, what work have you been doing? Pixar, it didn't happen. What exactly do you do here and stuff? I again, all, maybe morals, ethics, everything aside, I think it just shows how disorganized things at Twitter have been. And I mean, I don't know from an investing perspective how much of that, goes back to Tesla and if people, care or don't care. But my hunch is that Elon fire more people long Tesla. Look, Andy, you're free to interpret news however you want. I don't think this has any immediate impact on Tesla in the short term. We can go ahead and pull up Tesla's stock chart right here and see. I mean, it's down 2% today. It's still down 33% in the last 6 months. You can see here down almost 40% from its highs in September. I don't think it has any immediate or short-term acute effect on Tesla's stock. I mean, Tesla's stock took a big dip today when Powell talked about the interest rates rising, which is why I've been bearish Tesla the past couple months or so, because if you haven't come to that conclusion or notice yet that interest rates are going to keep going higher until a few things happen, and we can get into those few things in a little bit. But that's not, I'm not bearish Tesla right now because Elon Musk's going on this tweet storm. No, I don't think that has any impact. What I would worry about as a long-term Tesla investor is that while you simultaneously have multiple new EVs hitting the roads every year, whether it's the new Mercedes EQ or the Audi e-tron or all these like nice luxury electric cars coming on the market that, by the way, like actually update their models and have like cool outsides of the cars. They don't just sell the same model for like 5+ years. Simultaneously, you have all that happening. And then you have Elon doing this stuff, which, I'm not a CEO of a company. I'm, I just host a show. I talk about stocks. I talk about trades. I talk about my investments. I'm not the CEO of a company. I don't know if I ever will be blessed to be in a position to be there. I don't know. But what I do know is that if I were the CEO of a company, especially if I was the CEO of a company that sold products to people, that was a consumer-facing company, that company whose revenue is reliant on selling products to people, that I would try my hardest to not alienate certain people, right? And I think when you like I said, when you go on these, and here, actually, before I go to Benzinga Pro, we'll go back to the Twitter exchange right here, because this is what I think is interesting, right? So you have Elon Musk, right, saying like, what work have you been doing? He's laughing at this guy, basically this public exit interview. And I don't know, like getting fired, losing a job, whatever, it's a tough thing to go through. And it's a tougher thing, I think, when you have these posts on Twitter about it and you have your boss essentially poking you, sharing memes from a 23-year-old movie, all these things. Matt Binder tweeted, "There's no reason to treat someone like this. Just an absolutely horrible person." And he's talking about Elon Musk. Now, this tweet has been liked 86,000 times and viewed by 5 million people. We can go through some of the quote tweets, too, to see, what people are saying. "This man is a F piece of S and should be begging in the streets for the change, not among the richest people on earth. Holy hell. Halley is regarded as one of the best in the design industry. He founded a very successful agency in an expert field, kind, caring, generous." And I'm not saying, everyone on Twitter like holds the, keys to the castle and Elon should be worried about that. I'm not saying that, but I'm saying if you're selling cars to people, that's what your company does. And if you take a group of 100 people and now all of a sudden 50 people out of the 100 people say, "Yeah, I don't like that guy," that probably ain't great for business. And I don't know, maybe Elon Musk needs to have a talk with Michael Jordan, because this is something Michael Jordan understood a long time ago when people said, "Hey, Mike, why aren't you getting involved in all these like political things going on?" And he says, because Republicans buy shoes too. Michael Jordan didn't care who you were. He didn't care what your politics were. He wanted to sell you Jordans. I'm wearing Jordans right now because Michael Jordan has done nothing in his life to ever make me think, "Hey, I don't like that guy." And data shows that younger people, right? People like my age, 25 and younger, consume based on their belief systems more than other demographics. And it's just basic business and marketing 101 that if you again, are selling products to people, you want to appeal to young people, because guess what? If you could target a demographic to sell your product to, would you want to pick a 50-year-old that might buy your product for the next 30 years before they're 80? Or would you want to pick a 20-year-old that might buy your product for the next 50 years? It's a pretty obvious, decision. And the fact that, again, I don't want to make it political, but the thing is like Elon is alienating a lot of people right now. I see the Crow in the chat saying, "Oh my God, crybabies." Look, I'm not upset by this. I'm not triggered. I'm just saying from a purely business perspective. And I already said it. I don't think this, specific Twitter thing that happened last night has any impact on Tesla's bottom line or stock price right now. What I'm saying I'd be worried about as a long-term investor is that over time, you're going to start seeing some of these things reflected in consumer behavior, right? As more electric vehicles are on the market, as people have more options, Tesla's not, the only car on the road anymore in terms of electric vehicles. I'd be worried. In fact, I sold a lot of my Tesla stock because of this stuff. Because once Elon started, basically, picking sides politically and stuff, I said, I don't like that as a company, as a CEO of a company I'm invested in. So I sold a lot of my Tesla stock before it crashed 50%. And so again, not anything I'd be worried about right now. I'd be worried about, sorry, I'm putting my Jordans back on. You're rehashing an argument that was made a few months. Jay, again, I'm saying over time. Yeah, and there were a lot of people selling the stock then. All right, so a lot of people were selling the stock a few months ago because Elon was, for a multitude of different reasons, right? If you look at just tech stocks in general, a lot of people are selling a lot of tech stocks because we know interest rates are going higher. But you're right, Jay. One of the reasons people were selling a lot of Tesla stock is people were worried about Elon Musk's politics, how this was going to alienate certain people. And I mean, again, you think about who a core consumer who's buying electric vehicles. It's people out in California and New York that tend to lean left, that tend to be more liberal. And so that was a reason a lot of people were selling Tesla. Now, what happens, Jay, in the market is that, even when there's bearish sentiment, when an equity like Tesla stock hits a certain price, people are then willing to put that aside and say, okay, I'll buy this at this price. And that's what happened with Tesla stock. Once it got down to 100, it went up again. And again, I'm not saying this is any reason to sell Tesla stock today, whatever. But I was worried as a long-term investor that I don't think this is going to bode well for the company down the road. And I could be completely wrong. Tesla stock could double from here. I'll sit up here and say, hey, I was wrong about that. Liberals could, or people leaning left could buy more Teslas than they did last year. I have no clue. I don't have a crystal ball. I'm just telling you what I think, and from what I've seen, I know even in my own circle of like people who, in all honesty, like lean right and stuff, have been like, yeah, this guy's a clown. Like I don't like him anymore. And I don't know if there's, whatever Q rating. Like, I don't know. I don't think they have like president, approval ratings like they do for presidents or whatever. I don't know. It's just approval rate. What is it called? Like a Q rating? I don't know. Let's see. $538. This is. So I don't know. I mean, I would be curious to see that, data like over the past 6 months, as if his opinion, if people have liked him more or less, whatever. But yeah, I digress. Again, basically my point is right now, don't think it's really an issue for Tesla. I think Tesla's issues right now are less about, Elon Musk's politics and who he's alienating and whatnot. Yeah, and see, that's the thing is I think a lot of people who agree with Elon Musk on a lot of this stuff don't even buy Teslas, right? They want to drive gas car, whatever. So, I see our first guest. Hanging out backstage. We've got Warwick Smith, the CEO of American Pacific Mining Company. We're going to talk about the outlook of copper, gold, silver, some other metals as well. And honestly, like, I don't know. There's just so much with Elon and Tesla, and we could probably go on for way too long, but I think this is probably a good spot for us to go ahead and transition to our first guest of the day. So without further ado, let's go ahead and give Mr. Warwick Smith our very special Zinger Nation welcome. And when we come back, we'll be talking some metals, some mining, and Warwick says he's got a great quote on Elon, so I guess we're going to stay on Elon for one more second. Mr. Warwick Smith, the CEO of American Pacific Mining Co. It's been too long. How are you, Warwick?
I'm great. How are you?
I'm good. Thank you for asking. Where are you joining us from?
I'm in Toronto. Actually out here for the, it's called the PDAC, Prospectors Developers Association of Canada. It's the biggest mining show in the world.
Wow. All right. Biggest mining show in the world. We've got one of the biggest mining experts in the world with us. Before we get started on mining and metals, you heard me ranting about Elon. What's your quote you got on him?
Yeah, so Joe Rogan did a bit on this a while back with Kevin Hart. He was asking, they were talking about people talking trash at them on Twitter. And he made this comment and he said, do you think Michael Jordan reads YouTube comments? And it's just one of those things, man, that's not for winners, right? I don't know why he wants to go on and start trashing people on Twitter and stuff. It's like, people got better uses for their time, in my opinion.
Yeah, and it does. I actually had this argument with, I have a guy who helps me with some of my, like a money manager, essentially, investments. And we were having an argument about it because like I wanted to sell some Tesla. He was saying he still loved it. And he was like, he's, the modern day Steve Jobs, all this stuff. And I was like, you really think Steve Jobs would be doing some of this stuff, would be on Twitter arguing with people, would be going on SNL, doing all this stuff? And he's like, you know what? You're kind of right. Like Steve Jobs seemed so focused, right, on his mission that he didn't have time for that. He didn't have time to be on Twitter arguing with people, didn't have time to be trolling people, didn't have time to be sharing memes from Office Space. So it's not even that I have anything personal against the guy. It just kind of like rubs me the wrong way as an investor. Like I wouldn't want my CEO doing that, which is why I sold my Tesla stock, and you're a CEO, Warwick, so you can speak to it more than I can. And I know you're not really in as much of a consumer facing business where you're selling products to people, but you probably still got to be careful about what you say and who you piss off, right?
Yeah, it's very true. I mean, so we deal with things like stock boards, where guys can go on and say whatever they want under whatever name that they like, right? So, as a rule, I don't go and read them, because although I'm relatively thick-skinned, it would irritate me at times when people would say terrible things. And this is how it goes, right? Stocks going up, everybody's on there talking about you're a genius. Stocks going down, everybody's going on there talking about that you're an idiot. Neither one of those two things are true in my case, so I just sort of avoid it. Now, I do have a guy who checks it and just kind of feels it for sentiment more than anything else, so we can kind of see where the market's at and where the market's viewing things, just sort of as a whole. But I do view it with a bit of a different lens. I find it odd that people will want to jump on there in a fake name and have things to say where, I'm not a hard guy to find. If you want to say something and come shake my hand and tell me, no problem, right?
Love it. Well, thanks for that insight, because like it's good to hear that from someone who's got more experience than I do, who actually knows how to and what running a company entails. So Warwick, let's get into your business a little bit. What exactly, does American Pacific Mining Company do? I mean, I'm sure mining's a big part of it, but I'm sure there's other parts of it too. So just kind of a high level overview for our audience.
No, I appreciate that. So we're in mineral exploration. So we're essentially out finding deposits and looking to make them bigger. How we do it is we focus on high grade assets in the Western US. High grade being there's more gold than less. I mean, there are lower grade deposits that do really well, but we try to focus on high grade assets. And what we do is as a smaller company, it's about a sub $100 million market cap, we partner up with some of the biggest companies in the world, right? So we've got a partnership with Rio Tinto down at a project in Montana. Rio Tinto is the second largest mining company in the world. And then up in Alaska, we've got a partnership with a company by the name of Dowa Mining and Metals. They own the largest smelter out of Japan. And so we will find these assets and then rely upon these larger companies to work with us to help develop them. That way we retain a piece, but we don't have to lay out all the capital as well.
Got it. So I'm curious right now. I mean, we've been getting a lot more questions in our audience and interests in commodities and metals in general. I think because people have realized over the past year or so, hey, growth stocks and tech was where it was at 2 years ago. Maybe not so much anymore. What's the current outlook like? I mean, let's pick a specific metal to start. Let's start with copper, because copper, I think, is very interesting. You have this idea out there of Dr. Copper, right? You can look at how the economy is doing based on the price of copper because it's used so prevalently in all these different industries, construction, technology, whatever. Are you surprised at all at the strength and some of these commodities have been showing throughout the past year or so? I mean, I don't know if you remember this, Warwick, but 6 months ago, everyone was dead certain we were heading to this severe recession, right?
Yeah. So what's interesting when it comes to copper and a lot of these other what we refer to as battery metals is it's just a conversation from before. It's this EV revolution, right? If you look at your car, your gasoline consuming car, it's 18 pounds of copper on average to build. If you're getting an EV, it takes 83 pounds of copper. You actually get a Tesla, it takes 138 pounds of copper. So you're going from a time where there's about 700,000 electric vehicles on the road today, and they're saying by 2028 they want to have 4.5 million. That's a lot of copper. So, and that's just one instance. When you start looking at things like wind turbines and all this, they take a tremendous amount of copper. So if we're going green, you're going green via copper. So I think that's one of the reasons that you're going to see continued relative strength there. There isn't enough copper in the world to fund this entire EV revolution. So there needs to be major discoveries made in order to get these new cars and a new electrification on the road.
Yeah, and so I mean, and you have all of that, and then on top of that, the more traditional uses of copper as well, right? Like in construction and stuff. Is that slowing down, or because the way I see it is if you have right? Like a steady level of how copper has been used in the past, and then an increase in all these like future endeavors, like you're talking about EVs or whatever, that should push the price of copper higher. But if you have all these, new things with copper, but then the old ways people are using other stuff, then it might even out. What's going on there?
The consumption of copper remains the same for buildings, etc., for the most part. But what people don't necessarily recognize is this EV revolution is huge. If it's actually going to be, which time will tell. But the forward looking now on it is they're literally, when I tell you there isn't enough copper in the world to build all these vehicles and new wind turbines and all that thing, that is the truth. It's not there today. There needs to be new discoveries made, or there needs to be old mines that need to be brought back online, etc. It is a monumental task because from the time you find a mine, it takes years to then get it into production. So it's going to be interesting. The demand for copper it way outseeks what we have today. So you're going to need to make these significant discoveries or push these mines back and start, mining lower grades, etc. It's a conundrum for this EV revolution. That's for sure. It is solely reliant upon metals. I think a lot of people miss that. I mean, I find it somewhat interesting. And we were talking about, a lot of these EV cars are sort of left leaning and people who are thinking green. It takes a lot of metal to be driving a green car.
Yeah, and I mean that's been a long criticism I think of electric vehicles, but even specifically Teslas, people have been like, all right, how environmentally friendly is this when you look at how a lot of these things are going in? So what do you foresee, Warwick, in the future? I mean, just let's stick to just mining in general, because that's more your wheelhouse. What do you think will and can be done over time to make the mining process more sustainable, more in line with I guess I know ESG has a bad connotation now, but I guess just more sustainable a way to mine. Are there going to be changes, or you think, hey, mining's just a dirty business, that's just how it's going to be?
It's funny. I'm glad you asked the question. And yeah, I get the ESG is a phrase at this point. But listen, there's a lot of truth to the ESG strategies, especially in mining companies. Our company is public, right? So it is of the utmost concern to us that we're doing the right things for the environment and for the people who are within the jurisdictions that we work. That's key. It's key because it's part of who we are, but it's also key because if I'm doing it wrong, I'm not a public company, I'm going to be held accountable, right? That has been a massive shift in, call it, the past 30, 40 years, perhaps less, 30 some odd years in mining. People are way more aware of how they're dealing with it and making it a much less dirty word. That is something that's become really prevalent in the business. I'll give you an example. Last year, we were nominated for 5 awards through S&P Global Platts, including Deal of the Year, CEO of the Year, a couple of others. But every single company, when they won at the awards ceremony, they started off talking about their ESG strategy, because that has really become the focus for these mining companies. The days of, I don't want that in my backyard. Hey, these are great paying jobs. You look through the Western U.S., there's lots of places that need work. These aren't your jobs where you're, making minimum wage. You can make a lot of money working in mining. You can pick up a lot of skills working in mining. And so that's something that's become way more prevalent from the industry itself and how it's being looked at.
Yeah, I mean, I know just from firsthand experience. I'm from Missouri originally, and there's a small town called Frederickston, and I think they're getting ready to open up, or they're working on a cobalt mine there. I guess they found a big depository of cobalt there, and people there are stoked about it, and they should be, because this could take this little tiny, town that probably hasn't had a lot of good paying jobs in a long time, and put it on the map and get some high paying jobs and stuff. And again, people are excited. You have lawmakers, trying to push this through and all this stuff. And I think it's amazing. And I hope it happens for my home state. And I think you even, and I mean, this is way off topic, but even things with some nuclear energy, plants and stuff, same thing. Some, people used to be oh, not in my backyard or stuff. And then they go to shut down some of these plants, and you have all of a sudden all these people fighting to keep it going because they realize hey, where else are we going to get jobs that are paying this well, that are productive and whatever? So,
it's Something on the nuclear thing. I mean, there was this whole theory that, oh, we don't want nuclear plants or what have you. Fukushima was a big part of that, for sure, right? Well, the technology's come a long way since then. And believe me, if all of a sudden your house gets really cold, you're going to think nuclear power is a pretty darn good idea. It's one of the things in the U.S. There's a company called Kraken Energy, and they're going in doing a bit of what we refer to as a hub and spoke model, where they find these deposits, and they're doing a fantastic job at it. It's actually the guys who were all the young guys for a company called Next Gen, which was in the last cycle was one of the big successes in uranium. They put this company together. They're finding these good smaller deposits to start in the Western U.S. And the Western U.S. doesn't have their own supply, right? A common theme, as I'm sure it is on your show, that the U.S. has got to start looking internally for things. They're doing that for uranium down in the U.S., and I think it's super smart.
Yeah, I mean, definitely. I mean, probably the two biggest geopolitical events of the last 5 years have put that into perspective between COVID and the Ukraine-Russia war, which obviously showed the supply chain issues. It's not just a matter of an economic issue; it's a national security issue. I mean, if you are so reliant on other countries for medical supplies or energy and all this stuff, it's like, okay, what can we bring home? So, on that same note, I mean, you mentioned your partner with Rio Tinto. So most of American Pacific Mining Company's operations are in the United States, correct?
Yeah, so we focus on high-grade assets in the Western U.S. We've got a 14 million ton deposit up in Alaska. That's under partnership with Phila. They own the largest smelter out of Japan. They're predominantly interested in the zinc that's there, but it's a big zinc copper mine. Then we got an asset down in Montana that's under partnership with Rio Tinto, and then we have a couple of our own assets that are down in Nevada that we go after 100% ourselves. We are massively in M&A mode. We're looking for other assets that are out there that we can pick up. That's one of the reasons that we're down in Toronto. And in 2021, the Wall Street Journal Mining Index ranked us the #1 performing gold stock that year in the world. So far, so good.
Congrats. Well, so let's go, because we've only got like a minute or two left, and I don't know if we touch on. I want to just hit different metals or commodities and give me your quick, outlook on them each. Maybe like what you like about them right now, or what the potential headwinds could be. Let's start with the big boy gold.
Yeah, listen, gold's been an interesting one, right? So everyone's, at least for us guys who are in mining, we keep thinking it's going to break this $2,000 trend and push upwards and move on, and it's kind of bounced off of it a couple of times. But if you look, gold always works as a hedge. It's slightly up last year where everything else is getting punished, so it's doing its job. I suspect it's a mug's game trying to pick the price, but I would suspect it's going to bounce in range here for a little bit. Although I think in 2023, by the end of 23, it nudges higher.
All right, we already talked about copper. Let's talk about lithium for a second.
Lithium's probably the hottest thing in the street at this convention. All of the lithium companies have done incredibly well. So yeah, I think lithium has a huge future ahead of it. And for now, for guys who are looking for stocks to get in and stocks to trade, a company called Lithium Ionic, which is down in Brazil. I mean, I think I bought some of that at 40 cents. It's trading around $3 now. It's done incredibly well. It's right next to Sigma Lithium, which is one of the larger ones, and they're doing good things down there. That's a hot space.
Beautiful. Well, I was gonna ask about like any high level highlights from PDAC, the event you're at right now, but it sounds like lithium's been the talk of the town there.
Lithium's the talk of the town for sure. Now, sometimes you get into a space like this and it bubbles hot, right? So at some point it may pop, but for now, those are the hot stocks for sure. It's the lithium space. Let's see how long it lasts.
Yeah, I wonder why. It seems like with commodities, it's pretty common, right? You see that a lot in like natty gas. Like natty gas will go crazy and then all of a sudden crash and come back up. And it's like, I don't know why that. Maybe it's just because people are looking for any pockets of strength. So then they see, okay, everyone's buying lithium. I better get in now before it gets way too expensive. And then next thing you know, still hear me, Warwick. Oh, there we go.
Yeah, there we go. I got you.
Cut out for a second. But anyway, yeah, you see those bubbles a lot in different commodities. But all right, Warwick, any final words, any things we have not gotten to yet today that we should?
Listen, I appreciate the time. Always love coming on the show. It's been It's been a great couple of days down here in Toronto. It's nice to see metals getting a bit of shine to them now. That's a good feeling. It'd be a huge year for American Pacific, but it's $65 million market cap. There'll be $30 million of exploration that's been spent by our partners. It's not a lot of companies our size that can say that. So we're excited for a big year ahead, and looking forward to a busy 2023.
Sorry about that, guys. I think we had a quick Wi-Fi issue. Oh, here we go. Hey, Warwick. Sorry about that. I think we had a Wi-Fi issue on our end that kicked us all out.
It's all good.
But all right, awesome. Well, enjoy the rest of the event. I'll follow up with you in a couple months, and we'll get you back on for another outlook on metals and what's going on in the space. But again, just thanks for hopping on the show today. Been a great conversation.
Yeah, really appreciate you having me on. Take care. I love the Jordans, by the way.
Oh, appreciate it. All right, guys. Warwick Smith, CEO of American Pacific Mining Company. What it says reaching? Oh. All right, guys. I see our next guest hanging out backstage, my man Options Mike. So without further ado, without further ado, let's go ahead and bring Options Mike on the stream. Give him our special intro. Mr. Mike, how you doing today?
AB, good. Yourself, man?
Good. Sorry, but I know I had to push you back a couple minutes. Our conversation, we were having these issues, and the interview with Warwick got a little pushed back.
Awesome.
So, you have any thoughts on metal? I mean, you're trading options. There's not really a lot of options available on metals, right?
There are. I mean, you can trade like FCX or Alcoa or any of the steel names, right, or Cliff. But honestly, they all trade off the commodities themselves, and it's tough. I mean, I agree with somebody said, there's definitely a copper shortage out there, and there needs to be more of it. But we'll see. Market is really starting to rip back higher here. I wonder if Powell just finished speaking.
Yeah. I mean, I don't know. My overall market outlook right now is it's just so, to me, there's a floor and a ceiling, right? The ceiling is the fact that we got high interest rates. So I don't think, SPY's going to be ripping back to 4,800 anytime soon, making new all-time highs. And the floor is just the fact that the reason that interest rates are this high, the reason we have that ceiling is because the economy has been so damn strong. So people that are out there that are still doom and gloom, it's what are you looking at that is making you think the market's going to crash another 20%? Because in my opinion, as soon as the economy does show those signs of that much slowdown is when that means the Fed can then stop raising interest rates, which will make people more bullish again. So I know it's probably not that simple, Mike, but that's kind of the way I'm seeing things right now, to the point where I'm kind of more neutral. And if I would not be surprised, let's say in the slightest, if it's 6 months from now, we're on the show, I bring you back on, and we're still talking about SPY at around 4,000.
I don't know about that. Look at the market come raging back here just now. Powell today didn't say anything all that bad, right? He was pretty much par for the course, did say inflation's been, more stubborn than it's been, more persistent. There's going to be bumps in the road. I've been saying for a while, everybody expects inflation's going to go down a straight line. And I think when you talk to some of these big bearish people out there, they're pointing at last month, saying, I told you, or to me, that was just a move down and then a pump back up. And as we start to come back, see if we come back down. The biggest thing I took from Powell today was that we're probably going to see higher rates than they initially forecast, and that'll probably come out in the March meeting in 2 weeks.
And you don't think that's bearish, though?
So we're going to have interest rates instead of maybe 5.25 to 5.5, 5.75. Is it really that much more?
I mean, I agree with you. And these are all pretty historically normal interest rates, right? Not
right.
Anything like out, like crazy out of the world. Like I don't know. And again, like I think any so I'm neutral to bullish. Like I said it on the show before, right? If you have a 0 or a 1 is you're like as bearish as you can be, a 10 is as bullish as you could be. I'm probably like a 6 or a 7, right? Like I'm not ready to go full bull. And it's not even that I'm not bullish. I just, like I said, I just don't think that we're gonna see SPY at all-time highs anytime soon. But I could be very wrong about that.
Well, by anytime soon, it's going to take a little while to get there. But if the one thing is, maybe if this market starts to rally, there's so much cash on the sidelines that can pour into this market, and the chase will be on. We started to see parts of that at times. We're kind of stuck, and everybody's waiting for the Fed to say what they aren't going to do. And I lean bullish still on this market. I mean, there has some problems. There's some divergences there, but the market has been resilient. I mean, right now we're in the middle of a pullback, and I keep trying to stress that to people. Typically we have 4 or 5, 3 to 5% pullbacks. This one's gone a little bit further than 5% at its lows, but that's all we've done so far. And everybody's calling. People out there telling me, we broke 39.50 on the ES. We're going back to the October lows. I'm like, oh, come on. That would be like saying if we took out 4,200, we're going to all-time highs. I'm not going to make any kind of claims like that. We took the level. You take levels out, and then you see what the price action is afterwards, and see how they're taken. The biggest problem I think with today is these events have become such a political event, right? I can't even listen to them anymore. I started to listen to them, and I just had to turn it off because Congress, they just come on, they all just rail on each other and against them, their policies and stuff like that. And really, Powell doesn't say all that much in these. Really, it's more about the senators getting a chance to speak and to berate them.
Yeah, well, that's what I think is interesting is that like people who even like are bearish because of the interest rates. It's like, are they? I just you got to take into account the fact that they're going higher than what was initially expected because the economy's been stronger than expected. So like, I mean, I think all these people that were doom and gloom or that are doom and gloom now were a lot of the same people that 6 months ago were saying that, we were going to have a super severe recession. And I don't know. I mean, I think if you just looked at the data of how many times the word recession was mentioned on like CNBC or CNN or whatever 6 months ago versus now, like it wasn't even people were talking about if we were going to be a recession. It was just like, how bad is the recession going to be? And we haven't even been in a recession at all.
I would make you the case that we did enter a recession briefly last year with the GDP numbers were negative for 2 quarters in a row. That used to be the definition of a recession. Now we changed things around. But bottom line, Aaron, I think for me is you have employment remains very strong, and if people have jobs, the economy's strong, and it's going to be hard to beat inflation because people are still paying, right? They're still out spending money. Inflation stops when people stop spending money. It's a very simple formula. When people say, I'm no longer going out and spending that money because it's too expensive, that's when inflation will start to come down. So yeah, you can hammer on interest rates, but you're really hurting the people who probably can least afford it, right? You're hitting people who have debt, and it's costing them more to pay off their debt every month. So by the way, market's rallying here as we're talking. Powell finished speaking for the day, and tomorrow's a non-event for him because he's just going to repeat what he said here today.
Yeah, and I mean to that note, I mean I'm not going to disagree with you about whether or not those 2 quarters was a recession or not. I was more talking about after, I guess I don't know, my timeline's all screwed up now, but if whatever over like October, I don't know, 5 months ago or so, right? People were talking about as the Fed was raising interest rates like above 3.5%, 4%. A lot of people were, you had Professor Siegel on CNBC saying, "Oh my God, the Fed's engineering a recession," all this stuff. Yep. But even if those 2 quarters technically were a recession, I think for all intents and purposes, for a lot of people, it didn't feel like a recession because you didn't have this huge uptick in unemployment. And at least based on our barometer of what if a recession feels like, it felt a lot different than 07, 08. So if you're going to consider both of those things recessions, then maybe we do need a different way of classifying them, because again, those two
or maybe we're just in a unique situation where we've never had so much stimulus pumped in and so much buying of assets by the central banks, and they're trying to sell them and raise interest rates at the same time. And maybe we just need to kind of let this play out, and everybody just needs to take a deep breath. I don't mean you. I'm just saying in general, right? Because everybody is just so hyped up. Everybody thinks they know better. I mean, the big worry for me is that this Fed, in my opinion, I've been saying this for a while, this Fed is slow to react. They're very likely to overreact and raise interest rates higher and eventually have to cut them no matter what they say, because that's just the nature of how they work. They're slow to react. They tend to wait too long to do stuff. By the way, while we're sitting here watching this, NVIDIA highs of the day, AMD highs of the day. Guys, my room, if you guys are watching this, we've been talking about this all morning, that these names are showing relative strength versus the market. And I think for me, AB, is there's a lot of names that are still very strong out there. If you had a good report, you've been holding in NVIDIA, Tesla, Meta. I talked about these with Mitch the other day, First Solar, Salesforce, right? There's all these names that have these great reports that are just showing incredible strength out there. And the rest of the names are holding serve, but they're not falling apart.
Yeah. I mean, I know I would have myself, and I love like all those names long term. I just would have myself some like slight reservation adding some of those names right here and maybe, I mean, I guess like the interest rates I can't say just because interest rates are rising, because like everyone knows that's happening. The stocks are still going up. So I don't know. I guess maybe people don't care, but like it just seems like on the grand spectrum of stocks, right? You have stocks that are going to be more impacted by higher interest rates and less impacted by higher interest rates. And I think these high growth companies, that NVIDIA, Tesla, whoever, are going to be the ones that are more impacted. But again, these are all things the market knows.
Except most of these companies are deep in cash, right? You're not talking companies that are having to borrow money left and right, and they're not going to have a problem, right? The companies you worry about are the companies that are not. So, when I look out there, I continue to look at companies like Affirm, which are just hemorrhaging money, right? And they have a decent amount of cash, but how much longer can you continue to lose the amount of money they're losing? Or a Carvana, right, which is losing a fortune for every car they sell. That is a recipe for disaster as interest rates go up, because you already have a tremendous amount of debt. How do you borrow more? But I think if you're staying with good names, and I mean that, you're sticking with good names, quality names, do your little research. When I come on here, we're talking about names that are well established. They're not going anywhere. They have good amount of cash on hand. These are good. If you want to take speculation names, just realize you have a higher risk, so maybe take a little bit less of it, because they can be affected by this, right? I love snow, but I got to tell you, this report last week, that was just an ugly report. For a company that's full of growth, their growth was suddenly missing, and that's just not a good sign for a company like that. So they need to get back on that.
Who was this again? Sorry.
Snowflake.
Oh yeah, I mean the big data company. What are the other ones? The Datadog, DDog. I mean, how are those all doing?
They're doing okay. I mean, Snow is still down. It's pushing back up. DDog here, again, its earnings report wasn't great. It hasn't done anything. You can see the gap down. It continues to be weak. But, look at names like TTD, who had a great report. Look at the big pop, gave a lot of that back, but held a lot of this gap. Look at the relative strength it showed. Held the 21-day, pushing up, now trying to break to the upside. There are names out there, and the market's showing you what it wants, and you just have to be looking at it and paying attention. Again, I post charts for you guys every weekend for free. You don't have to be a member. You follow me on Twitter. It's out there. And I'm constantly drawing attention to these names. But everybody wants to say, well, Google's not trading well. Apple's not trading well. I mean, Amazon's not trading well. Well, Google had a horrible presentation, right? Google put themselves in the penalty box when they rushed because they panicked over Microsoft and ChatGPT partnership. So they're just in the doghouse right now. They're in the, they're just in the penalty box, but they'll come back eventually.
Yeah, I mean, well, I talked about that on this show, and if you looked at the price action at Google that week, I mean, the stock dropped, I want to say, like 7 or 8% over just a couple days. More than $100 billion of market cap wiped out of the company in like a couple days. And I get it, right? It was a bad look for Google, who, has invested and put a lot of money into AI over the years. But to me, it was like a gross overreaction. And I said on the show, like, not that this is investment advice, and it wasn't investment advice then, but I was like, this is an easy buy down here at like 80, whatever. Because it's like, you got to realize, and I didn't mean for like a trade, but over the long term, AI is going to be this huge opportunity. You really think Google's just going to let it pass by and let these other, Microsoft, whoever, come in and take their lunch? No, Google's going to be a major, whether they have that first advantage leader, okay, maybe not, but Google will have, right, their hands in AI and be a major player in AI. The fact that just the initial, we're in like the first You're not even in the first pitch of the first inning of AI.
It's not even AI yet. It's still machine learning.
Right. You're not even, that's what I'm saying. You're not even in the first pitch of the first inning. You're like, you haven't even gotten to the national anthem of the baseball game yet.
Yeah, but
yet
the risk to Google is a little bit different, right? So if you were to talk to me about other companies, because Amazon's going to come out with AI, right? The risk to Google is that if this is huge and people migrate to Bing because of this interface with ChatGPT, and if it's as big as they think it might be, then suddenly Google starts losing a lot of advertising revenue because as all that money heads over to Microsoft now and Bing. Now, I am not on that camp. So please, I'm just pointing out that's what the major concern when that's what the drop was. It's not about being first to AI. It was about that Google was just totally unprepared. And they, as you pointed out, for somebody who's been working on AI and a big part of it for years, that presentation was a disaster. And I don't mean the wrong questions. I just mean it was just a bad presentation. And they would have been.
And I understand. I understand that part of it, but at the same time, like, to me, that assumption was like, okay, ChatGPT is perfect, Google's is terrible. When if you look at ChatGPT, that has a lot of issue, gives a lot of wrong answers as well. And the whole point of AI, machine learning, whatever you want to call it, is that it like makes mistakes, gets smarter, you teach it how to get better, and like that's the process. And so for me, it wasn't that I didn't understand why the stock went down. I'm not even saying that I'm not even saying that I think it shouldn't have gone down. I just thought it was an overreaction by the market.
It is, and then we'll see what tonight brings. Because tonight at 4:30 Eastern time, CRM is going to present their AI at the Morgan Stanley conference. So if you guys are paying attention, we'll see how that's received tonight because they're going to be doing their presentation tonight.
There you go.
Another flair in it.
All right, Mike, any other individual names that we haven't gotten to? You know, I think we've gotten some good overall market outlook. We hit on Snow. We hit on Google.
I keep saying this. Uber is just acting so well since earnings, and it's a game changing. And I know a lot of people don't like this, but you know, forget Lyft. Uber's the one. They've kind of won this little war between those two. They're going to be the one. And again, you have this downtrend broken here. It's working its way up. Again, if the market pushes up, these are the type of names I would be running towards as Uber at this point. Your Metas, your CRMs, if that holds, if their presentation's good tonight, right? And then the only one I'd be a little bit more cautious with here is Tesla. It's kind of holding in, but it's not acting so well. But it's still, as long as it maintains and holds above this 190 area, or we'll call it 187, I think it's okay. But it's lost its luster. And again, another one that did not have a great investor day, right? Another one that probably would have been better suited not having one because they gave all this hype for it, and then they didn't actually give anything on the stuff they hyped. So that's never a good thing.
Yeah. I'm excited for that. I mean, did the CRM report already a couple weeks ago?
Yeah, that's what that big gap up was on it.
They crushed it, right? Salesforce crushed
it on earnings, crushed it on guidance.
Yeah, they gave strong,
incredible guidance, increased their buyback to $10 to $20 billion. And then, and now they're focusing on being profitable. You have all those, you have your 4 or 5 activists in there that made them all happy. I'm sure a bunch of those activists dumped a bunch of their stock on that.
Yeah, it was funny because leading into the report, Wall Street Journal posted an article about how much money the company was paying Matthew McConaughey to be a spokesperson for the company. They're like, how are you paying this guy $10 million and laying off all these people? And it's like, well, I guess it worked. I guess Matthew McConaughey did something right.
You're paying $10 million, unfortunately, to a company like Salesforce is nothing. I mean, look at the buyback, a $10 billion buyback. That's just telling you they're putting their cash there. That's what they're working on. So, you're saving a couple billion by laying off people and basically doing cost cutting, but then you're buying your stock back. It's a very mixed signal. So basically, they're okay. They're just trying to make investors happy.
Yeah. All right. Well, Mike, this has been a great, catch up with you, seeing what you're looking at, seeing what you like right now. Anything else that we haven't gotten to already?
I can't believe I'm going to say it, but I keep my eyes on Snap.
Snap was up like 12% yesterday on news that TikTok might get banned.
Well, I mean, that's, I think, what the play is here. And for me here, this 12 area has been a real bear, right? You can watch this 12 to 13. You can see how it is. But look above 13. You see this big gap that's still sitting here that goes up to 16 and change?
Yeah.
So, I mean, again, on the right news, this thing gets up into there. It could fly. And again, look at the volume that's increasing the last 2 days as it's trying to push out. So I would just continue to keep my eye on this one. I don't think they're in good shape long term. In fact, I think the last report was really bad. But sometimes, news trumps everything. And if TikTok gets banned, Snap is, as well as Meta, but Snap is definitely the big beneficiary.
And Google.
Google at YouTube to a certain extent, yeah, and they're trying. Google has their YouTube Shorts now, right? That they're trying to take on Snap with that.
No, and I don't think it's tried. I think they're from last Google's report, and they talked
they're not
about
monetizing it yet.
No, but the data is that now. I mean, if you think about it, Mike, TikTok has kind of screwed all of our attention spans and ADD up. I mean, YouTube videos used to be great. You watch a 5-10 minute video explaining how to tie a tie, how to fix my computer. Now, guess what? People don't want the 5 to 10 minutes. They want the 60 seconds. And so, YouTube themselves was saying we've seen all this traffic essentially go from our longer form videos that have the more, monetization to the shorts. So as soon as they kind of kick up that monetization on the shorts and stuff, I think they're trying to get it more sticky right now to get users there. So definitely Instagram Reels, YouTube Shorts, Snapchat, three beneficiaries. Probably you're right that Snapchat and Meta maybe a little bit more than Google, but I'd throw them in there because also you have to realize that Google is a bigger company, so it matters. It's going to have a small.
They're bigger and they're slower to move.
Yeah,
it just takes more to move the needle. But yeah.
But yeah, I mean, and like you said, news. Sometimes you can throw fundamentals. Sometimes you can throw fundamentals out the window because at the end of the day, the market's driven by speculation. So if the speculation is that, Snapchat's going to be a big beneficiary of this and people are like, oh, and look at the chart, it's cheap. But I was curious about that. And you mentioned the report before I could even ask because I was like, when you're looking at a stock like this, do you just look at the chart? Do you want to look at the fundamentals a little bit? Do you want to at least make sure they've got some good revenue numbers?
You definitely want to look at fundamentals in a market like this, right? They actually matter for they were mattering last year. They matter here. The fundamentals on Snap, they're not in great shape. In fact, in my opinion, maybe if TikTok gets banned or better, they probably need to be bought out. They're probably in that kind of trouble where they're just not getting it done on their own. And we'll see. But they guided down for the first quarter. They missed badly on last quarter, and they remain under pressure. They're still blaming Apple for some of their problems. And you know what? Apple's Apple. Can't blame them for everything. You got to fix it and get around it.
Yep. Well, all right. Options Mike, going to go ahead and drop your Twitter in the chat. Go give him a follow if you have not already. Thanks again for hopping on with us today, short notice.
Thanks, guys. Have a great week and see you soon.
All right. Have a good one, Mike. All righty, y'all. It is 12:40. We don't have anything scheduled at 1. We're going to go ahead and wrap up the show a little bit early today. Basically, all you need to know, Powell didn't say too much. Interest rate's going to go a little higher. Market took a dip on that, but I don't think that was really anything outside of what people were expecting. So you got to factor in what's priced in, what's not. So without further ado, I'm going to go ahead and sign off for the day. We'll be back on Thursday. Till then, please smash the like, subscribe to the channel if you have not already. And please also, I see someone saying the algo on YouTube's terrible. They hate YouTube. That's fine because we're on a lot of other places. Give us a follow on TikTok. Give us a follow on Instagram. Give us a follow on Twitter as well. And again, we'll be back Thursday, 11:30 a.m. Eastern. Till then, stay green. Love you guys.
This is Benzinga.